Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions.
Hey there, investors! Welcome to a brand new week filled with exciting possibilities. Why is it so exciting, you ask? Well, because it's earnings season. Now let's dive into some interesting tidbits about this period. Did you know that earnings season typically stretches from about a week and a half after the quarter ends until the end of that month? It's a time when companies release their financial results, giving us a glimpse into their performance. And here's a fun fact for you. During peak times, we're talking about 100 firms reporting their earnings each day. That's a lot of numbers and statements to digest. Earnings season is a crucial time for investors, as it gives us insight into how well companies are doing and can impact the stock market. It's a time when investors closely analyze and react to the financial reports, trying to gauge whether a company's performance meets, exceeds, or falls short of expectations. So buckle up and get ready for some exciting news coming our way. Keep an eye on those earnings reports, as they can often spark market movements and provide valuable insights into the state of the economy. Happy investing and have a great week ahead. So, let's talk about what's been going on in the economy and the news recently. One thing that's been making headlines is the rise in oil prices. On Monday, the price of oil went above $1.91 a barrel. Why is this happening? Well, tensions in the Middle East have been increasing, and some experts are worried that if things don't improve, we could see oil prices go even higher, potentially crossing the $100 mark in just a few weeks. The fear is that the war in the Middle East could spill over to other countries, leading to even more instability in the region. Interestingly, analysts from ANZ Research are predicting that oil prices could reach $100 a barrel in the short term, despite the fact that Israel and Hamas, the two parties involved in the conflict, are not directly linked to oil supplies. So what's the connection? Well, it's about Iran. If Iran gets involved in the conflict, we could see a reduction of up to 20 million barrels per day of oil. That's a pretty significant amount. In other news, we have some global hits to discuss. Rite Aid, the well-known pharmacy chain, has recently filed for bankruptcy. It's definitely not good news for them, and it will be interesting to see how they navigate this challenging situation. And lastly, Hollywood seems to be missing out on a big opportunity. The Chinese movie market has been growing rapidly, but it seems like Hollywood hasn't quite been able to tap into this market as effectively as they would like. It's something they definitely need to work on if they want to maximize their potential earnings. Oh, and let's not forget about the Indian market. Despite its potential, it's not exactly cheap to do business there. So, companies looking to enter the Indian market need to carefully consider their strategies and resources. It's earnings season, and things are looking pretty good so far. Let's dive into some of the highlights. First up, JPMorgan Chase. They beat expectations in the third quarter with both their profit and revenue. Their revenue jumped a solid 21% to over $40.69 billion, thanks to increased net interest income. Profit also surged by 35% to $13.15 billion, or $4.33 a share. It's worth noting that this includes some losses in securities and legal expenses. JP Morgan even admitted they were over-earning on interest income. Plus, they've increased their guidance for the year from $87 billion to $88.5 billion. Next, Wells Fargo had an impressive outing. Higher interest rates helped them counter slowing lending activity, and it showed in their numbers, causing their shares to jump 3.1% after hours. They reported earnings per share of $1.48 in the quarter, excluding some tax benefits. Now let's talk about Citigroup. They surprised investors with a better-than-expected earnings report. The organization saw growth in both institutional clients and personal banking. Their reported revenue came in at $20.14 billion, which is higher than the expected figure of $19.31 billion. But hold on, there's more to come. We're still keeping an eye on the consumer and tech sectors. Some financial companies like FB Financial, HDFC Bank, and Charles Schwab are reporting today. Bank of America is set to report tomorrow, and big tech players like Tesla and Netflix will join in from Wednesday, so stay tuned. That's all for now, but we'll surely keep you updated as more earnings reports come in. Now for some crypto. It seems like the world of digital currency is making some exciting strides. For all the car enthusiasts out there, Ferrari is now accepting crypto as payment for their cars in the US. That's right, you can now buy a sleek Ferrari using your preferred digital currency. Talk about a luxury purchase. But that's not all. Ripple, a well-known cryptocurrency, has experienced a major win recently. It has been elevated with the inclusion of its digital asset, XRP, in Hong Kong's top crypto index. This is a significant achievement for Ripple and further solidifies its position in the crypto market. In other news, the U.S. Securities and Exchange Commission, SEC, has decided not to appeal a loss in the Grayscale case. This unexpected announcement has sent cryptos higher, igniting optimism and enthusiasm among investors. It'll be interesting to see how this decision plays out in the crypto market and if we'll witness any significant changes in the near future. So whether you're a crypto enthusiast or just curious about the latest developments, these updates surely add an exciting layer to the ever-evolving world of digital currencies. Keep an eye out for more intriguing news that might shape the future of crypto. When it comes to investing in stocks, it's not just about knowing when to buy, but also when to sell. Exit strategies are crucial to help investors realize their returns and make informed decisions on selling their stocks. So let's explore some common exit strategies that can guide you in managing your investments. One strategy is setting price targets. This involves determining the price at which you plan to sell your stock. You can base this on a specific target you've set in advance, fundamental analysis, technical analysis, or a combination of factors. Once the stock reaches your target price, you can consider selling some or all of your holdings. This approach is popular because stock prices tend to go down after reaching a certain point, and it's about recognizing and benefiting from that point. Another strategy is implementing stop-loss orders. These orders help limit potential losses by automatically selling your stock if it falls to a predefined price level. It's essential to protect your capital from significant declines in stock prices. Remember, stocks don't only go up, and it's crucial to consider how much time you have for investing. Trailing stop orders are worth considering too. With this strategy, you can set a percentage or dollar amount below the current market price. As the stock price increases, the trailing stop automatically adjusts, locking in profits. But if the stock price drops by the specified percentage or amount, the trailing stop triggers a sale. A time-based exit strategy involves setting a specific time frame for holding your stocks. For example, you might hold a stock for 1 year and reevaluate its performance and your investment goals at the end of that period. If the stock hasn't met your expectations, it may be a signal to sell. This strategy can be a bit risky, but can work well if you expect a company to achieve something in a specific time frame. Additionally, fundamental and technical analyses play a role in exit strategies. Continuously assess the fundamentals of the company you've invested in. Negative changes in financial health, business model, or outlook may indicate the need to exit your position. Technical indicators and chart patterns can also help identify potential exit points, such as moving average crossovers, overbought or oversold conditions, and trendline breaks. While planning your exit strategy, it's important to remember a few key points. Stay diversified in your investments. If you exit an industry, consider replacing it with something else to maintain a diversified portfolio. Conduct regular portfolio reviews to assess performance. Keep an eye on macroeconomic events, news, and market trends that can impact your stocks. Periodically revisit your financial goals and life circumstances to adjust your exit strategy accordingly. And don't forget to factor in tax implications when selling, as gains will be taxed. Instead of selling all your shares at once, consider scaling out of your position gradually. This approach allows you to capture potential gains while still having exposure to further price appreciation. Today's personal finance quote is a gem from Yogi Berra. He once said, "You've got to be very careful if you don't know where you're going because you might not get there." And boy, isn't that the truth. When it comes to our finances, having a clear direction is key. Think about it. If you're setting off on a road trip, you wouldn't just aimlessly start driving with no destination in mind, would you? Of course not. You'd have a map or a GPS to guide you towards your desired endpoint. The same principle applies to our financial journeys. Without a clear financial goal or plan, it's like driving blindfolded. How can we make progress if we don't know where we're headed? We could end up anywhere, and it might not be where we want to be. That's why it's crucial to take the time to define our financial goals and create a plan to achieve them. Whether it's saving for a dream vacation, building an emergency fund, or planning for retirement, knowing where we want to go allows us to make the right choices and take the necessary steps to get there. So let Yogi Berra's wise words serve as a reminder to all of us. Take the time to define your financial goals, create a roadmap, and stay on track. Because when you know where you're going, you're much more likely to end up exactly where you want to be.
In today's episode, we discussed the start of earnings season, rising oil prices, strong earnings reports from major banks, cryptocurrency updates, the importance of exit strategies in stocks, and the wise words of Yogi Berra to be cautious when lacking direction. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.